Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be talking about the crypto market as a whole. We'll be taking a look at Bitcoin, see what's going on, why we've seen a pullback, and what this might mean for your crypto investments. Guys, as we get into this, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Right, with all that said, done, and out of the way, let's actually jump on down to the desktop and take a look at what is going on here with Bitcoin. Okay, guys, so obviously we can take a look at the chart in a moment. We'll actually dive into a couple of things. I can see there's a few kind of things going on in the space. Lots of people saying, you know, maybe the Fed killed Bitcoin. Is that kind of something that's kind of going on? There's a few articles out there saying, you know, ultimately how the Fed are going to unwind their balance sheet and, you know, the S&P 500 slides. All of these kind of things kind of going on. This actually stems from the minutes from the Fed meeting, right? So this happened back in the 14th and 15th, I think, of 2021, December 2021. Now, obviously, I have the minutes here. You can easily find this through the Federal Reserve.gov website. You can go check that out if you want to actually read the entire thing. In summary, you know, there's kind of things going on there about securities and you know, unwinding and how fast they want to do this, etc. I don't think that's actually kind of what's going on in the background, despite these kind of articles kind of picking on it a little bit, kind of like focusing in too much, saying that the Fed is what killed Bitcoin off, or why we've seen such a huge pullback. I think ultimately, if we were actually aware of the technicals, we were talking about a potential pullback into this low range of 43, 42K range. And again, that is based on the Elliott theory. Above and beyond that, though, some more interesting things that are actually more aligned to what's actually going on. If we actually think back to May, we had China clamp down on Bitcoin mining. A lot of those miners actually moved over to Kazakhstan. And here we can obviously see that the hash rate is down 13% as Bitcoin obviously dips to 43K. And this is basically a political unrest in Kazakhstan. I'm not going to go through the entire thing here, but you kind of get the idea that China banned Bitcoin mining. The miners had to sell off a lot of Bitcoin to move their operations to nearby countries. We saw a huge migration over into Kazakhstan. They're quite friendly towards Bitcoin mining and the electricity rates, etc. It's actually quite profitable. We also saw a huge migration of crypto miners into other countries as well, but there was a bit of a focus on Kazakhstan. So when you start to see Bitcoin hash rate down 13%, and you know, the political unrest that is in Kazakhstan at the moment, it makes you think actually this is less and less important when you actually start to think about what drives the hash rate and you know, the Bitcoin price overall. We saw something very similar when we were in May, and here we are with some kind of similar kind of disturbance from a political standpoint that's affecting Bitcoin. Okay, and obviously Bitcoin affects the rest of the crypto space. So it's always good to kind of get an understanding of this. However, this does seem to be short term. Okay, this doesn't seem to be, you know, a huge kind of pullback. It is very corrective in its nature, and I'll go into the charts in a moment. But there are a few other things I think are quite important to kind of focus in on. Big money is coming into DeFi as 30 institutions set to join permission DeFi pool 𝗕𝗓. So again, this is interesting kind of stuff that's also going on in the background. Some more institutional funds are or institutional players are looking to kind of get into DeFi, which obviously makes a lot more sense because the banks are unable to kind of match the rates that you can get from DeFi. This is also followed up by, you know, 2021 saw a 9.3 billion in crypto inflows by institutional investors compared to the 6.8 billion in 2020. So there is a natural kind of growth here, and we could potentially see more in terms of institutional investors in 2022. Okay, and they're only just starting, and we're starting to see a lot more kind of steps towards that DeFi. Obviously, Chris did a video on VeChain. VeChain's gone into DeFi as well now. Obviously, it's a smart contract platform, and it is designed for enterprises. And this is really important to understand with their tokenomics and the structure of VeChain and its level of adoption, right? Them going into DeFi and, you know, having a stable coin, etc., is absolutely massive for VeChain. We cannot underplay that in any way, shape, or form, because enterprises that might want to actually get into DeFi are probably going to be looking at VeChain because there's 5-star TERV rated blockchain provider in at least this side of the world, in Europe, etc. That's a big deal. And obviously with big players like PwC and DNV, their clients are more than likely going to use VeChain. So if they want to get into DeFi, that's the place that they're going to start looking. So it's a big play with VeChain there. And I do want to kind of highlight that specifically as we talk about institutional investors and DeFi as a whole. Obviously, as we come onto here, we can obviously see that Bitcoin will outdo gold, if you will, in 2022. According to Frank Holmes here. Obviously, that all depends on whether you believe that or not. I think it's too soon to say 2022 is the year for that. At some point, though, I do think that, I say outdo. It depends on what he means by outdo. I'm not going to read the entire article here, but if he means outperform, yeah, it probably will outperform gold from a percentage point of view, but it won't have the same kind of level of market capitalization or anything like that, going into it. So we have to understand, where it's going to sit. Yes, it'll probably outperform percentage-wise. It's kind of a bit of a given, to be honest with you. And we do expect it to perform well, but I don't think it's going to have the market cap of gold anytime soon. But in the future, I do see, Bitcoin actually flipping the gold market cap, which will be a fantastic kind of time to see. Okay, so we have that also going on, right? So there's lots of things going on in the background, outside of just the minutes, right? And there are some interesting points in here. Guys, do go check it out. For example, a rollover at auction, all principal payments from the Federal Reserve's holdings of Treasury securities, and reinvest all principal payments from the Federal Reserve's holdings of agency debt and agency MBS in agency MBS. So overall, there's a few interesting kind of points here worth kind of paying note to. Conduct overnight reverse repurchase agreements, operations, etc. So yeah, it's worth probably having a look at it, but I don't think this is what we've seen or why we have seen a pullback with Bitcoin. Actually, what we think we're seeing here is a correction, something that we've kind of acknowledged before already. Now, we were on this channel talking about a bounce. Okay, we were looking actually at bouncing up towards that 618. That was 58k. It actually turns out that we seem to have actually hit a bit of a barrier. So that bit rate decline over in Kazakhstan, potentially forcing us down a little bit lower, but we actually found resistance up here at the 382. So basically 52k, that seemed to be the upper limit. We were unable to push any higher, and now we started to see this down turn. So this actually seems to be our B wave, right? So we have our ABC down. And I'll remove that for ease of this. So basically we have an ABC down, but that's actually just an A wave in itself. And then we have a B wave here, and then a potential for a pullback further. Now, just because there's a potential for a pullback here doesn't mean it actually comes in. This C wave can, of course, be exactly the previous A wave low. And considering the status on the oversold area on our chart of this weekly, of course, we take a look at the oversold status on our daily. And of course, we're actually looking for a decline right now on our hourly. So overall, we are expecting some kind of pullback a little bit from our 43k range, but we don't want to go down any lower than we were previously. And I think that was exactly 42k. It was $42,000.30. Okay, so that's kind of where we kind of want to see that that actual kind of finish there. We don't want it to go any lower than that particular point. So we'll be watching that. That stochastic RSI can move very, very fast. So we do want to be aware of that. But ultimately, if we do actually go down lower and we go down a little ways, this does mean that we could see this ABC correction. We'll show you the most probable area for completion there. That would actually take us down to 25k. Now, that would be a very bearish scenario, and I don't think it's very probable at this point, but I do kind of want to highlight that as a potential. Okay, so what we'll do is we'll actually grab hold of our price range. By the time we actually have that previous high, which was $69,000, if I actually grab that, it's approximately about there. That going down to that low is a drop of 63%. It would be a very, very bearish scenario. And I cannot see that kind of playing out fully to that degree. So I think it's important that we also acknowledge that there are some other plays that are going on here. And one of these which is the most significant one. So I'm just going to tidy this up a little bit and go down into our daily chart, is the head and shoulder pattern. Okay, so we've been tracking this head and shoulder pattern, and I felt that this was a bit of a fake out. So we come down up for the left hand shoulder, down for the left hand shoulder, up for the head, down, back to the neckline, bounce up for a shoulder. Although it was shorter than expected, we had the right shoulder form, we pulled down. This is now the testing point. And what we look for on the head and shoulder pattern, let me actually grab a horizontal, actually I'll take a trend line because we are slightly angled here. So this here is our neckline. Okay, and what we normally would expect to see is a breaching of that neckline. We come down below it. We then push up and test the neckline. And if we're bearish, we would actually see that get rejected from the neckline. Okay, but actually what you see here is a wick below it and then a directly push up. And considering our stochastic RSI positioning, I think there's a high probability that this never actually plays out. And this is why getting into a head and shoulder pattern and trying to trade one isn't necessarily the easiest thing to do. What you tend to have to do is you find people sometimes actually jump the gun. They see it here and they think, oh great, I'll short the market. And actually what you're waiting for is not only just to go below the neckline, but you also want to retest it and then get confirmation of that rejection before you go bearish or go short or whatever. For us right now, this is an interesting time because we could potentially see this on the daily chart actually get that reversal and that push up, and basically anyone going short at that point are going to get liquidated out of the market. More liquidations on the horizon. But yeah, we are finally here. This is a pattern that I spoke about God knows how many weeks ago now, kind of forming out, and my views were very much like this at the time, that this would be a fake out, and actually we are more than likely going to continue that growth to the upside. And again, that comes in line with our Elliott wave counts as well. So we obviously had our ABC to the downside here. Let me just make that yellow so you can see that a little clearer there. Our ABC to the downside, and then obviously we had that ABC up, and this is now the completion of an ABC to the downside, which means we are likely to get a reversal soon. So what we have here, if I grab hold of this, we had our corrective action to the upside. Okay, and you can see that there's actually a 1, 2, 3, a quadruple bottom here. This is a really good strong support level. And then we set that higher C wave. Now, obviously it was a short C wave. It wasn't as high as expected. As I said, we were expecting to go slightly higher, and then we started to see this reversal and this pullback. At that point here, you can also see and acknowledge that we had that pullback. We pushed up again, and then we fell down. Now, when we go ahead and actually measure this out, and this is on the daily chart, I'm going to clean up some of these hourly charts so we'll get rid of those. So here we can see, and we can measure the distance of our A wave. We'll take that here from the bottom to the top, and we'll just move that, make sure I get that exactly where I need it, which would be right there. And then we'll put the A wave back. Okay, so we have our A wave, and it's measured as a total of 1. So we go from 0 on the fib to the 1 on the fib, and then we're going to grab it and we're going to move it up to the high B of the B wave just here. This then shows us coming down to 42,127 on our C wave. And here you can see that we've wicked down just above that threshold. So there's a little bit more downside potential here for a 1-to-1 ratio. So A wave equaling the same as the C wave. Of course, we can go down lower into those 38K ranges on this daily chart, breaching that neckline, and that's also very valid within this ABC move. And what we're not seeing here is that impulsive move. What we're not doing is we're not seeing 5 waves down. We're just seeing a consistent corrective action, corrective up, corrective down, corrective up, and so forth, right? And there's a lot of ABC corrections going on. That's very, very choppy. There's no definitive trend being set. There's no impulsive move one way or the other. So what was actually a pretty positive news, because it kind of means that the market is more than likely going to continue to the upside as per the last impulsive move, which of course was way up here when we got to that 65K range. Potentially we are well in our 5th wave still, and we are still tracking that to the upside. This head and shoulder pattern here I think isn't likely to kind of play out, but if it does, then we'll pull back down, retest this neckline, and there's a strong probability that actually going above that trend line and that neckline is actually something that is likely to occur. I do not think that we are likely to go down to 25K, even though it is a possibility. I do not think it is very probable at this point, and I think actually this is the last kind of it's another shakeout event that's occurring here. We see more and more news articles like this and trying to scare people. It's obviously been picked up by many different influencers in the space saying, the Fed killed Bitcoin. But actually the reality is that the bit rate is down in Kazakhstan. Loads of your miners actually moved over to Kazakhstan. Hence you see that bit rate down over there, or that hash rate being down over in Kazakhstan, and that relates back to what happened in May. And of course, we cannot ignore the big picture here. More institutional investors are jumping in, and as a result of that, they want it cheaper. So whales are shaking retail investors out of the market. They're stomping out and liquidating anyone who's using leverage. Long, short, it doesn't matter at this point. Any market maker is able and capable of seeing all of your stop losses positions as well, and they're getting stomped out too. So ultimately, investing in Bitcoin right now, using things like leverage is high risk. But obviously, right now, I do expect that this is going to get a reversal based on the momentum of price, that stochastic RSI. We want to see the speed of recovery on that. If that stochastic moves fast to the upside, more downside is likely to occur. If it moves slowly to the upside, then we are probably in for a pretty good recovery out of here, and this head and shoulder pattern might become invalidated very, very soon. So overall, a potential for a little bit more to the downside. I'm not expecting it to go down massively. Hence, Chris and myself, we were in the market just yesterday before this recent pullback, when we were actually thinking things had finally kind of reached a bit of a bottom. And we were actually, buying things like Polkadot, Chainlink, VeChain, Matic. I think Chris got into MTV. I bought a little MTV, and so forth, right? So we've been in the market, yesterday thinking things had finally kind of reached their point. Then we see this kind of news, this narrative, this FUD to bring the prices back down again. Bitcoin leading the way there. But overall, still bullish. Overall, I do expect this to recover, and I do expect all-time highs in 2022. And the main thing here is to hodl strong and continue as we are. Guys, hopefully you have found this video useful and informative. If you have, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.